Hello everyone, hope you guys are doing great and welcome back to the channel. So today's video is going to be slightly different, right? It's going to be different. I'm not going to talk about any companies or results or management commentary and everything. I'm going to talk something completely different because recently what happened, right? One of my subscribers to my channel, right, he commented that, okay, sir, you're discussing so many good companies. I'm only confused where to invest, where not to invest, right? So when I read that comment, right, I was wondering, okay, there might be a lot of people who might think like that, or might have a slight confusion and everything. So I thought, why not make a video where I will just try to give a small and a general framework which might help you guys to, understand or make a decision how to, decide which company to invest or where not to invest. So obviously, before I get into that, it's just a disclaimer. This is not an investment advice. This is just for educational purposes. So please take it from that perspective. My objective is for you guys to learn, to understand, so that you guys can make a better decision. So let's get into it, right? So obviously, if you look at the stock market, there are thousands and thousands of companies, right? And we need to understand that we as investors only have limited capital, right? We cannot invest in all the companies which are there out there in the stock market, no matter how good they are, right? So we have to make a choice. No matter whether a company can have a good, business, good management, good industry, they have a tailwind and everything, right? But at the end of the day, right, one has to take a decision. I mean, if for example, if you can take like in the if you see in terms of AI, right, we have network and we have E2E, right? They both are in the same industry, but their business model is different, right? So what to invest, what not to invest, it becomes purely a decision on the investor and upon depending upon their framework, right? So I'm just going to share some few basic things, right, which will help you in order for you guys to take a decision. So I would suggest you guys to take a pen and a paper to note down certain things what you are listening and hearing from, so that you do not forget about it. And I hope this video would be quite helpful for you guys, right? So first thing what I would suggest, right, if you have you have listened read about a lot of companies, research and everything, my suggestion would be, right, so make a short list of those companies, right? Let's say you research close to 100 companies, and then from those 100 companies you like close to around, let's say, 50. But obviously I would not suggest you go ahead and put your money in all the 50, because that would actually won't make sense at all. So what I would suggest, right, make a shortlist those companies, right, and rank them. So you might ask, Masood, how should I rank them? So it all depends upon one's investing framework, right? Like in my case, I give first priority to the growth and the future growth, and the valuation related to that, and then rest all comes secondary to me. So I rate them accordingly. So according to you, what is the first criteria? Whether it's management quality, whether it's the industry opportunity tailwind, whether it is the valuation, whether it is the growth potential, what is the total addressable market, what are the things that you are looking for, and accordingly, right, rank those companies and make a shortlist, and automatically you will find out, okay, I have these companies. When I rank them according to what I prefer the most, right, you will get a list of top 10, 20, or I would suggest max to max around 25 companies, where you can rank them accordingly, and you'll be like, okay, these are the companies which I think, right, I am going to rank them. And obviously, when you rank them accordingly, whichever has the highest rank is the first priority, because this becomes much more helpful rather than going on Twitter, going on YouTube, just getting random stock tips and trying to invest. Because trust me, I have done this in the past, and when you just invest through these random stock tips and everything, you don't know what is happening and you are completely confused. You buy today, you sell tomorrow, suddenly the stock price falls by 20%, and you are one is completely confused and don't know actually what is happening. So this is the first thing I would suggest. Create a short list of companies, ranking them according to the criteria which you want, whether it is growth, whether it is management quality, whether it is valuation, tailwind in the industry, whether it is cyclical, all those things, margin expansion, and do that accordingly. Then the second thing I would say, right, that is one thing. Then second thing, it should align with our risk, right? Because see, Some people in the stock market have a higher risk appetite. Some people have, how to say, more aggressive risk appetite, right? So I can divide those kinds of investor into a conservative investor and to an, an aggressive investor kind of a thing. So conservative investor, they don't want to take too much risk, right? So they generally prefer to invest in companies which are mostly into mid cap or mostly into mid cap segment. Examples like MCX, Kalyan Jewelers, or recently the one growing one is like Yatata. So they are much more stable, and the business would not go out. But so they would invest over there. But some people are very aggressive, right? So like they want to invest in small or micro cap companies where they see a huge potential to grow. For examples like TAC Infosec is there, Max Volt is there. All those things are there, right? Personally, if you ask my investing style, I do want to invest in companies which are a bit big and have a good growth rate. But at the same time, I prefer companies which are quite small and how to say, have a high potential to grow in the next 5 years, 10 years down the line, right? But obviously, at the same time, we need to understand, right? The risk that I'm going to take with the small and micro cap are more than the mid cap and the large cap. So one has to decide accordingly, right? Because even if I don't have, if for example, if I don't have the risk appetite to take the volatility which comes with, investing in small and micro cap and the things which come into, why would I want to lose my peace by investing over there? Right? It's better I go and invest in some good mid cap companies which will grow at a decent rate. So that is also one very good thing, because what will be the best stock for me might not be the best stock for you guys, right? Because your risk appetite might be different. I'll give you a recent example, right? I'll give you the name of the company also. It's called Nurturewell Industries. So I invested in that company recently, and then suddenly because of this and majority of the business revenue all is from export, and most of these exports go to the Middle East, almost close to 70 to 80%. And when this war started, and all the Strait of Hormuz got closed and everything, obviously there was uncertainty in the market, and I don't know, and obviously the sale also fell down for the Q4 sector. So obviously a lot of uncertainties were there, and suddenly the stock literally went half, almost 50% down from my buy price. I knew what I was doing. I knew what is the risk is involved. I know what is happening. So I was not bothered about it. I was like, okay, it has happened. Let's see how things progresses, whether things are going to get better or things are going to get worse. And then I will take certain decisions. But what if you did not have the risk appetite, right? You would have just got scared when it fell by 10% or by 20%. You said, okay, I'll hold till 20%. What if it goes down by 30%? What if it went down 40%? What you would have done, right? So over here, I knew my risk appetite. I knew what is the business doing. I knew what is the impact and how they can get out of it, right? So that all helped me, because recently when the Iran and Israel, Iran and US deal got signed and the Strait of Hormuz is about to open, right? When I knew things are getting clear, I almost put 50% extra of the capital what I had earlier invested, right? Knowing that things are getting better. And for the past couple of days, right, the stock has been hitting upper circuit, because I knew what I was doing. I knew my risk appetite, and I knew what is going to be the risk and reward. So that is also a very important thing, right? Without knowing our risk appetite, if we invest it, we are going to be in a big trouble. So the next point I would say is, like, after assessing those things, right, I would suggest divide one's portfolio in various ways, right? Personally, if you ask me, I would divide it in three parts. First is high conviction bet, right? Over here, generally, I would say allocate around 40 to 50% of your capital where the management execution is done, growth visibility is high, and industry tailwind is quite strong, right? So wherever there is a high conviction, there is a good growth visibility, management has executed in the past and they're going to execute in the future, right? This is where majority of the money should go for. So that I would say is like the highest conviction part. And the second, I would say it would be like medium conviction, where you should put around one should put around 30 to I would put around 30 to 40% of my money over here. The companies are good, they are executing, but we're still monitoring the execution and seeing how it will progress further. And the third thing, which lot of many people might not agree, but I call this as an experimental part of the portfolio, where I would just one should put around 10 to 20% of the capital, where you put very small portion of your capital, whether it could be 0.1%, 0.5%, or less than 1%, where one knows that the story is exciting and then there is a huge potential, but the execution is still unproven. Because, and the reason I'm saying very less amount of capital is because What if something goes wrong, right? The company can literally, you how to say, close on your whole capital would be lost. So you putting in the almost 40 to 50% of the capital over here, it's a big risk. So this is how I would do it, right? First of all, high conviction item where one should put around 40 to 50% of their capital. Second is medium conviction with around 30 to 40%. And I would suggest the last would be around, I would say, experimental part where something exciting is happening in the company, but we are not sure how it is going to go forward. So we just put a small amount and see how things are going. And as things progress well, and then we take the decision forward. So that is one thing. And the last thing, one of the thing which I would say is, right, before we again put in the money, now the question one needs to ask ourselves, you know how big the company can be in the next 5 years, right? That's where the actual money is made for the shareholders. Because if you look at Bajaj Finance, it was a very small NBFC before it became a multi-bagger for them, right? Kotak Bank was small, HDFC was small, Asian Paint was small, and they became huge. So this is what we need to look at, whether the company can grow that big or not. And if the answer is not clear, my personal suggestion is I would not invest, but I would track and see how things are going, right? That is also one of the important things. So, because if the company cannot grow much bigger in the next 5 years, then how would it make money for its shareholders? How to say shareholders at all, right? So, the final thing I want to conclude like this, right? Right now, the biggest challenge that we have is, people who are investing, like information overload. There is a lot of information. You go everywhere on Twitter, WhatsApp, or Telegram. Someone would tell, buy this stock, buy this lot. It will go 20%. It will go 40%. This is happening. That is happening, right? My point is very simple. The solution for making more money in the stock market is not about finding more stock. It's about creating a framework. Because if one has a framework, right, one knows what are they looking for and what are they going to invest and what they can track and hold on to, right? I mean, you just can't invest into 50 or 100 companies and think that you'll make a lot of money, right? Because personally, I mean, I have seen people's portfolio where I was just consulting with one of the guys, right? The portfolio was only very small amount of only close to 2.5 to 3 lakh, but the person had almost close to 50 to 60 companies. I mean, it's just crazy, right? How can you expect things to change? And in one another person had a very big, had a quite a good, decent portfolio, but he had almost close to around 200 stocks in it, which is quite crazy. So it doesn't work like that. What actually works is, right, we identify good businesses, we track them, we invest in them, and we grow with them, and obviously hold them. And when things go wrong, we are quick to sell them. So the point is, right, yes, we always need to keep on looking for new ideas, what things are happening, what new industry is doing and everything, right? But the most important thing is, right, we need to develop a skill to select good businesses, right? And the way we can do that is, right, by changing our mindset from a stock picker as a, like, as a businessman. If I was in, running a business, would I run this business or not? Would I like this business or not? That is also one of the most important questions, right? So these are the things I would suggest one should do in order to decide which companies to invest. Because personally, I also research a lot of companies and look at a lot of companies, and there are a lot of good companies, right? But obviously, my portfolio is certain amounts because of what I like, what I believe as per my risk appetite, and what I see the good. Am I saying the other companies are bad? No. But this is what suits me and my portfolio and my personality. And that's what I do accordingly. So you should also build your portfolio according to that, and nothing else. I hope this video was helpful, and you have guys have learned something new and help you in on your own journey in investing, and you have learned something new to do. I'm going to make another video in the coming days where I talk about uh, how to say, should we hold the business for our whole lifetime? Like, because a lot of people talk about this Warren Buffett quote and all those stuffs, right? That hold the business for the whole lifetime and you will make money, all those things. So I just want to talk about those kinds of things, the myth and the reality, and prove that with figures and numbers. So please be ready for that. And if you like this video and if you have learned something new, please do hit like and subscribe to my channel and share it among your friends who wants to learn. Thank you and God bless you.